agus fáilte arash to the Crazy House Prices podcast, the podcast where I help you buy your own home, get your finances in order and generally help you adult a bit better. I'm your host, Ciarán Mulqueen, and today in episode 30 I'm joined by my very own accountant Alan from Cloud Accounts to talk about the very sexy topic that is taxes. Now, before you switch off, hear me out. This episode could save you hundreds, if not thousands of euro. Myself and Alan try to break down everything you need to know about claiming tax credits, filing your own tax return and avoiding those tax back companies charging crazy commissions for stuff that you can do yourself in around half an hour. We cover everything from rent tax credits, claiming for flat rate expenses, so teachers, listen up for that one, working from home relief, and what to do if you've got a side hustle. Alan shares practical, easy to follow tips, no jargon, just clear advice to help you put money back in your pocket where it belongs. So let's go. Hi, I am just going to pause the podcast for a second to talk to you about some sponsors of the Crazy House Prices podcast. This episode is sponsored by Daft.ie. Daft is Ireland's #1 property portal. Daft has the most properties available for sale and rent and is the preferred national property website amongst consumers in Ireland. So Daft.ie's core vision is to make buying, selling and renting property better for everyone in Ireland. So Daft's mission is to simplify each step of every property transaction in the Irish market to make buying, selling and renting in Ireland simple. That's why Daft.ie build innovative tools like Offers by Daft, an online real-time offers platform that provides never before seen transparency for the Irish consumer when buying a home. Are you looking to buy? Maximise your chances of finding your dream home by visiting Daft.ie, Ireland's #1 property website. Now on the podcast today I have Alan, who is my accountant, as it happens, from Cloud Accountants, and he is going to run through all your questions and the real common things about tax. So thanks so much for coming on to the podcast, Alan.
Thank you for having me, Ciarán. Delighted to be here today.
My pleasure. We are in contact almost daily, usually not about tax issues, but
bit of crash, everything in between.
Yeah, and I have a degree in accounting as well. I always like to remind people, so it's I always do find these things interesting. But I guess the goal with this is to try and help people save themselves a few quid when it comes to even being able to file their own tax return and all that. So I know you've thoughts on all that, but basically, what are the most common tax credits and reliefs that PAYE employees can claim?
Yeah, good question to start. So basically, you hear these advertised and announced all the time. Medical expenses, where you've got qualifying medical expenses, you can claim 20% of the cost of that back as a tax rebate. Working from home expenses, if someone is working from home, revenue will give you tax relief on the cost of your light, your heat, your broadband for the number of days that you work from home. There's some jobs out there that get flat rate expenses, like teachers as a great example, which are if the tax credit relief that are given to you to apparently help with the cost of uniforms and tools of the trade. You'll probably tell us here on that the teachers one is nowhere near enough, but that's a whole other conversation and debate. Then there's a few kind of tax credits that people could be looking at. The home care tax credit's a brilliant one for anyone who might be in a position where they're jointly assessed couple. One person is working, the other is maybe a stay-at-home parent. They can claim the home care credit, and that's quite lucrative. There's ones there for single parent, child care credit, incapacitated child credit. If someone has a child with a disability, for example, they can claim tax credits there. The rent tax credit was brought in a couple of years ago, obviously very popular on your page. So that one is constantly going up in the budget every year. I think it's up to €1,000 annually now, which again isn't huge in the grand scheme of things. It's probably not even a month's rent for most people who claim it, but make sure to be claiming it. Mortgage interest relief was brought in a couple of years ago for people who are on trackers and variable interest rates. So that's eligible for 2023, 2024. And yeah, there's just a whole host of them that people really should be looking into and making sure that they're claiming what they're eligible for. Nursing home fees, employing a carer, if maybe even elderly or incapacitated relative. There's loads. So it's worth even just Googling tax credits revenue and see what pops up and see if any of them are available to you.
I just find sometimes the language on revenue can be a bit of a barrier for a lot of people because it's very, revenue-y. So I know you have a lot of content on your Instagram with a breakdown of pretty much all of these tax credits. So there's loads of really good stuff on there if people want to go and have a look. That breaks it down into kind of more understandable chunks of information. But the basics are all there. And then depending on your job, you might get other things or whatever. But let's say I'm a teacher and I want to claim my flat rate expenses, or let's say I'm a jointly assessed couple and we have a young child and one parent is at home looking after the kids. How do I go about getting those rebates, those tax rebates? Do I need to use an accountant? Should I use one of those tax back companies, or can I do it by myself?
Definitely can be done by yourself. I've been being in my bonnet about those tax rebate companies, so I'd highly encourage people to not use them because they charge crazy commissions for work that you can definitely do yourself. I know a lot of people are kind of off put the idea of engaging with revenue. There's a fear factor there for sure. In general, revenue are extremely helpful. Might sound strange to hear, but they really are. And if they owe you money back, they give it back to you so quickly. They're there to help as well. If you pick up the phone to them, if you're really in trouble or you really can't figure out what you need to do, they will guide you over the phone in most cases. So don't be put off by them. Don't be afraid of them. But in terms of actually making the claims yourself, you do have to do it yourself, unfortunately. So there's a little bit of admin work done, but I'd say a little bit, and I mean that it, in general, should take you no more than half an hour, I would say, to fill out a tax return. And it could be a very worthwhile half an hour. I've seen people claim them back in the thousands, or we help them claim back in the thousands. So for half an hour's work, it's not a bad outcome. If you're in that scenario, even if it's a couple of £100, it's worth doing. I say to people, it's your money, it's there. If it was sitting in front of you at the table, you would put your hand in it and put it in your wallet. You do have to go through this system and complete it. But all you're going to do is go for revenue.ie, click on the link for my account. You log in there with your MyGov ID, so it's your EPS number, a password. They'll text you a code to your phone for 2FA. So it's all nice and secure. And then under the PAYE services banner in the Revenue My account, you'll see review your tax 2020 to 2023, because you can do 4 years, go back as far as 4 years, and click on that. And it's a 5-step process. So basically, most of the information is pre-populated. They've got section 1, personal details, section 2, your employment income. So that'll be there. Nothing really to change on either of those. Section 3, you'll declare any non-PAYE income that you might have had. So like rental income, side hustle, interest, dividends, that kind of stuff. Section 4, you'll claim all your tax credits and release, whatever you're eligible for. And they're all nice, clickable, drop-down menus. You punch in a few numbers into the relevant box and away you go. And section 5, you're ticking a box saying that this is all true and correct and signing off on it. And that is it. It doesn't take long and it's not rocket science.
And everyone has access to a myrevenue.ie account, don't they? Once you have a PPS number.
Yeah, they should do. And if you, for some reason, don't, again, get onto Revenue. They'll help you get that set up. Very straightforward, but everyone should have access to it. And it's a system that you can't break. So click into it. Don't be afraid of it. You can kind of save your work as you go, come back into it. If you do need a break or it's a bit more troublesome or cumbersome than you think, there is information and guides within the tax return itself. So they really are doing everything they possibly can, except for doing your tax return for you to help you get this done. So honestly, give it a try. It's well worth doing.
It's a very worthwhile half an hour. And as you said, those tax companies that claim to do this for you, correct me if I'm wrong, but I think a big part of the issue is you basically give them access to your really quite personal financial information, and they do just basically tick the boxes for you. Instead of you logging in, ticking the boxes, they just log in and tick the boxes, and then they take a huge commission on that, don't they? So it's something like 30%, is it? Something like that?
I've seen them range from 7% to 30% plus of that. And some of the ones that are at the 30% end of the scale, they have these lovely, social media campaigns and ads that are very clickable, and they'll ask you just to pop in a couple of details, and unbeknownst to you, you'll do it. But very, very quickly, you will appoint them as your tax agent, which means they can liaise on your behalf with Revenue. So it's very easily done. I've had clients of mine where I get notifications saying Joe Blogs is no longer your client, or you're no longer his agent. And when I've contacted them to see what happened there, they're like, "Oh, I clicked an ad on Facebook. That didn't do anything." But they've, kicked me out and replaced themselves as their tax agent. So when somebody is appointed as a tax agent, they can amend your bank account details so that tax refunds go into their account. That's actually changing because Revenue are no longer allowing that to happen, which is good news, because tax repayments and refunds should go directly into the account of the person who is due them. But yeah, you could be paying up to 30%, and those lovely, very clickable ads that are on social media will tell you, click here to see if you're due €1,000 rent tax credit, which you very well may be. You click it, you fill it in, and they will charge you €300 plus VAT if they're charging 30%. So on your £1,000, €369 is gone at the click of a button, and it's money lost that you really could do yourself.
Yeah. So moral of the story is don't use those companies basically because you can do it all yourself. And I can understand when maybe years ago it was a bit more complicated, but now with the new revenue website and all that, it really is very, very straightforward. Like I've done my AVC stuff myself and done a few bits, and that's not with any it's fairly self-explanatory on the website.
Yeah, and it's very nicely laid out. Like anyone who's self-employed is on a different system called ROS, which is a bit older looking in terms of software, but the revenue my account for PAYE employees, it's bright, it's colourful, it's like weirdly almost attractive to look at. It kind of engages you, hooks you in. And it's all just nice, clickable drop-down menus, boxes that, as I say, you can't go wrong. You can't break them. Just you find what's relevant to your circumstance. You fill in the information that's required and you proceed. So AVC is a good example. That's in section 4, tax credits. You look for you and your family, I think is that one. You'll see a box for additional voluntary contributions. You click on it. It asks you for a couple of bits of information. How much did you pay in your AVC? You attach in your ABC certificate, you press submit, and revenue will do the rest in the background. They'll calculate how much you're due back. And in the very first section of the tax return, it asks you for your IBAN. So they'll just transfer it directly back into your bank account. Really simple.
Only an accountant would find a revenue website attractive.
Lovely soft palettes and lovely colours. It's great.
Yeah.
Brightens up your day.
I'm going to pause the podcast for a second because I want to talk to you about a company called Financial Planning Matters. Their website is fpms.ie. This is a company that I know very well and the team behind it are fantastic. It's a small Irish company that believes that financial planning should be accessible, easy to understand and affordable for everyone. That's why they offer personalised financial advice that's tailored to your unique needs and goals. Their team of expert financial planners will look at your current financial situation and develop a personalised strategy to give you a roadmap to achieve your financial goals. It's not just about setting up a pension or investing your money. They'll consider all aspects of your finances to help you get to where you want to be. So that could be saving for your deposit. It could be knowing where to invest your children's allowance. It could be maybe you have loads of money and you want to know what to do with it. So their customer service is incredible. I've been using them for over a year now and I cannot recommend them enough. So check out fpms.ie. Now, back to the podcast. Right. So let's say somebody is working as a PAYE worker, but they have, as a lot of people need now, a side hustle, an extra job on the side where they need to make extra money, whether it's grinds, whether it's another company, whether it's working as a sole trader, whatever it is that people have to do now to try and survive and live especially in the cities. So let's say somebody has a side hustle and they have an income from that. What do they need to do?
Yeah. So I've heard this from a few people where there's a kind of a myth out there that if it's below £5,000, they don't need to declare it. That is definitely not the case. There is a €5,000 threshold where if your income from your side hustle is less than 5,000, you declare it on this Form 12 PAYE tax return. If you're earning more than £5,000 in your side hustle, you have to register for income tax and you fill in the not so attractive Form 11 tax return on ROS, but it's definitely taxable income. And if you are in receipt of, let's say, under £5,000 for the convenience of this pod today, you are going to go to the Section 3 non-PAYE income section of the tax return, and you're going to just click on the relevant box to declare that income. So that will be trading profit. They'll ask you for a brief description of the business, whatever it is you're doing, grind, for example, the year end for the business. Most of them will be 31st of December. Then how much did you make? So they'll ask you for your income and it'll ask you for your profit. So if you have any expenses that you incur or have to pay out to generate that profit, to generate profit, you can deduct them from the sales or the income to bring your taxable profit down. And that bottom line figure of profit is what they will tax you on.
So let's say I earned $4,000 outside of my normal job. How much tax do I pay on that then?
That will depend on how much you are earning from other sources of income. So if we have this standard rate cutoff point or standard tax band, which is €42,000 in 2024. It's going up to 44,000 in 2025. If you're earning more than 44 grand in 2025 from your employment and you earned, let's say, 4 grand from your side hustle, you're going to be paying 40% rate of income tax, 4% PRSI, and about 4.5% USC. So roughly speaking, revenue will take 50 cents of every euro away from you.
Yeah. So I've heard that as well before. People think if it's under £5,000, you don't need to declare. It's just the way I look at it is if it's, you have every extra euro you earn outside of your normal job, you technically should be paying VAT on or paying tax on it. But the €5,000 thing is basically if it's under £5,000, it's way easier. You just submit it yourself. It takes 2 minutes. If it's over £5,000, you have to register for income tax, and that's going into the sole trader kind of thing, and that's a lot more complicated. So if it's under £5,000, it's much easier. You can do it in a couple of minutes. If it's not, it's a bit more complicated. I remember I did like an extra income thing a few years ago, and it was, I don't know, 4,000 something. And then every year after that, the revenue added that on, even though I had registered then as for income tax and all that. So it's a bit of a mess. So you just need to keep an eye on it. I guess they made a mistake that time, that thankfully you caught. I didn't notice it. You caught it. But
and they can do that sometimes. Like they're humans as well. The revenue, so mistakes can sometimes crop up. Like if you add in a tax credit, let's say the rent tax credit, if you apply that at the start of the year and it goes on your tax credit certificate, that will probably stay there indefinitely until you take it away. So you could have somebody who's been overclaiming tax credits because of something that happened 3 or 4 years ago, or as you said, in your case, you had an additional income that you had once, and for some reason, revenue left it on your profile for 3 or 4 years. So thankfully, we managed to get the tax back on that one. But revenue would kind of say, "Oh, it's up to you to regularly review your account to make sure everything's up to date." So don't be afraid of that system. Log in, check your tax credit certificate is correct. You can check that now for 2025. These are kind of boring, grown-up things, but sometimes they have to be done.
And what if people are afraid of that, if they are afraid of owing tax or dealing with the revenue? What's your advice there?
Yeah, this came up a couple of years ago because with COVID, pandemic unemployment payment, wage subsidy scheme, all this kind of stuff, people were getting untaxed income at the time, effectively, Kieran, and revenue started writing out to them then to say, look, you need to file a tax return because you've got PUP and tax has to be paid on that, unfortunately. They were kind of decent the way they went about it. They started reducing people's tax credits going forward as a way of paying it back instead of asking for a chunky lump sum payment. But since COVID is thankfully behind us and that PUP, TWSS and all that kind of stuff is gone, it's rare enough that people would have an underpayment of tax nowadays. So it can happen, but you're going to be few and far between. And if you do all it, they're going to come after you looking for it at some point anyway. Their system will probably flag it and say, send a letter out to Kieran there, he owes us £2,000. And they're going to look for it back. So, better than digging your head in the sand, just engage with them and deal with it early.
Okay, brilliant. So we got loads of questions sent in. So I picked a few. We got lots and lots of them, but I picked a few that a lot of them will have been covered in what we've already spoken about. But so these are just questions sent in on Instagram. So the first one is, can a married tax credit apply if the spouse is on job seekers allowance?
Yeah. So that is where you're jointly assessed. Get asked this a lot. We're a married couple. Should we be jointly assessed for tax? I always say there's no downside to joint assessment and just set it up and leave it. Benefit of that is you only have to do one tax return between the two of you instead of two if you're doing tax returns. And also if one person earned less than that 44,000 standard tax band that I mentioned earlier, and the other person earns more, they will definitely pay less tax with joint assessment. So for this particular person, job seekers allowance is not taxable income. Job seekers benefit is, because they're jointly assessed, whoever the working spouse is can use the personal tax credit of the other spouse, which will be worth, it's €1,800 in 2024. No, 1,875, sorry, in 2024. It'll be worth £2,000 in 2025. So that'll actually take that amount off of the working person's tax bill for the year.
Okay, deadly. And we touched on AVCs earlier, but there was a question sent in about them. Now, I'm a big fan of AVCs. So AVCs, instead of paying a large tax lump on a bonus, how to do it, the tax is a killer at 52%.
Yep. So that person is probably earning over 70 grand, where it's actually 70,044 euro. It's a random number where you start paying 52 cents of every euro away that you earn above that. So that is a killer. Let's say they've got a 10 grand bonus, just for argument's sake. Instead of paying 5,200 of that in tax and only getting 4,800 into their bank account, they could look at putting some or all of that into their pension, which is an AVC, additional voluntary contribution. So what will happen is they're probably in some sort of pension scheme at work where maybe they put in 5% of the salary and the employer matches it with another 5%, but they're able to put in more And if they were to put the entire bonus, let's say 10 grand, made up hypothetical example, revenue would give them 40% of that back. So it's the 40% income tax rate, the higher earner tax rate. They give them that back. So 10 grand goes into the pension and 4 grand goes back into that person's bank account from revenue by claiming the tax relief on it.
Okay, let me just get my head around that. So let's say, just for argument's sake, this person's is on 75 grand. So they're paying that high thing. So their employer can give them the option of giving them 10 grand as a bonus, but they'll only come out with 4,800, correct?
Yeah.
So, or that 10 grand can go into their pension. They'll have an extra 10 grand in their pension pot and they'll get back 4 grand in tax relief. Is that right?
Yeah. So they put the 10 out, and actually what will happen is, because they're going to do it through payroll, they won't even need to claim back the tax relief on it. So the 10 grand goes into the pension, and yeah, it's just, they're saving that, they're getting the tax relief on that. So it's money, free money, basically. Much better than handing 4,000 or 5,200 quid over to the revenue.
Yeah. So in that case, you're not down any money, really, only 800 quid or something. But you've now got an extra 10 grand in your pension that wouldn't have been there had you just taken the 10 grand bonus.
Correct.
Jesus. That's mad, isn't it? Perfect.
No brainer.
Yeah, absolutely.
No income tax paid, but basically, yeah.
There was another question sent in. So, thoughts on self-employed taxation? I know people who work less because it's not worth it.
Yeah. I've seen this in a few examples where some people maybe stop or reduce their work output towards maybe the end of the year because they don't want to hit a VAT registration threshold. That's one, and I had seen that a couple of times. They just don't want the additional burden of additional taxes. And then I'd never say to someone, you're not going to come out with more money by working less and reducing your income. Like, that's just not going to happen. But that 44,000 cutoff point again, once you go over that, every euro you earn above it, you're giving roughly 50% of it away in tax. So if someone gets to 44,000, they might just say, it's not worth me doing overtime, for example, and working really, really hard on top of my normal job, or maybe they don't do that side hustle and put the effort in there because they're just getting 50% of it taken away in tax. So it does happen. Like I said, if you are paying tax, you're making money, which mightn't soften the blow at all. It's just a great example of someone doing overtime where they're on €1, there's only tax about 20-25%, and then the next euro is taxed at 50% because they tip over the scale, and it's just hard to bear.
Yeah. Okay, I get it. Okay, next one. I'm a PAYE worker full time, but I'm also looking to become a sole trader. So any tax tips? And then also on that, would it be better to be a sole trader or a limited company if you're, say, looking at buying a home? Trying to buy a home or get a mortgage?
Yeah, there. So good question. Like the sole trader limited company thing, you're going to be assessed on having 2 years of accounts as either a sole trader or a limited company. The mortgage guy has always said, don't be put off applying for a mortgage just because you're a sole trader. There might be a few more hoops to jump through, but plenty of sole traders and self-employed individuals get mortgages every year. So it is a little bit easier for employees for whatever reason, but yeah, don't be put off and applying, and either structure will work when it comes to getting a mortgage. Then tips for setting up as a sole trader, I would say set up a separate bank account for your business. Treat it as if it is a fully fledged business from day one. Don't be calling it side hustle and hobby business or anything like this. Give it the respect it deserves. You'll never kind of grow it into a fully fledged business. Talk to an accountant and just make sure you know your tax obligations from day one so that you don't get caught for not correctly accounting for VAT or not setting enough money aside for your tax liabilities. The benefit of setting up the additional bank account specifically for your business is if you use like a Revolut, for example, you can set up a vault where you can put 25 or something % aside to cover your tax bill, because there's nothing worse than getting to tax filing and payment time and having nothing left because you've spent it all. So they'd be the kind of main tips, and just know what expenses you can claim and what expenses you can't claim, because I see that all the time as well. People think that they'll write off a whole heap of expenditure and maybe one of them is an asset, so it's a capital allowance and not an expense, and some things are just not allowed to be claimed, so they end up with more of a tax liability than they expect. And then find out if you want to be a limited company or a sole trader. That'll depend on your business. If you want limited liability, if you want to make big pension contributions, the limited company is a better option. But again, be informed. I've seen the one example I always use in this one, Kieran, is a person I spoke to before who was advised to set up a limited company for her business. She was making $5,000 a year as a side hustle. She was paying the higher rate of tax because she was earning over 40 something grand in her job. The accountant charged her $3,000 a year for all the work the accountant was doing. It wasn't me. So she was left with 2,000, 50% of that went to revenue. So she was left with $1,000 at the end of it all. But it was a terrible idea to set up a limited company.
Yeah. So she should have just done, because it was under $5,000, just done the income, the DIY, doing it herself. So always important to get good advice. Right. Capital gains tax then on investments. When do I pay them? And can you use capital gains tax yearly exemption, say in November and then in January?
Yep. There's an annual exemption from capital gains tax. That's €1,270. Random number, but it used to be £1,000 converted over to euros. So that'll tell you how long this exemption hasn't changed for. When do we get the euro? 1999 or something, right? So there was a big hoo-ha in the last budget about inheritance tax thresholds. Nobody was mentioning this one. Anyway, that's another conversation. You can use it. It's an annual exemption, as it might sound obvious. You can use one in November and then you can go again in January. Yeah. So once you tip over past the 1st of January, the clock resets, you've got your new annual exemption, and make sure to use it. And basically that will save you about 420 quid in capital gains tax by using it in full. And when do you pay capital gains tax? If you sell assets between the 1st of January and the 30th of November, you pay the tax by the 15th of December in that same year. If you sell assets in the month of December, you pay your CGT by the following 31st of January. And in either event, you file your capital gains tax return by the following 31st of October.
And what percentage is it?
It's 33%, so it's high. And it's on the sale of shares, property, cryptocurrency, any assets, basically.
Okay. There was a really good question sent in from somebody. How do I calculate if we are better off tax-wise to move to a 4-day week, both currently working 5 days, obviously, and in the higher tax bracket?
Yeah. Okay. Get asked this a bit. Good question. Basically, if you were to go from a 5-day week to a 4-day week, you're going to take a 20% reduction in hours, and you will not suffer a 20% reduction in net pay into your bank account. Just won't happen because you're paying tax at the higher rate. If you let's try and use an example here. Someone's earning 50 grand a year, right? They drop down to a 4-day week, so they're suddenly on 40,000. Previously, 6,000 of the 50 they earned was being taxed at 50%. Now, all of their income, their 40,000, is going to be taxed at the 20% income tax rate plus PRSI and UFC. So they're going to make a bit of a saving. What I would suggest doing is Googling PwC tax calculator. It's exactly like it sounds, tax calculator. You'll stick in your current income, 50,000 a year, and it will tell you how much tax you pay annually, monthly, weekly, and then put in 40,000 and look at the numbers and just see what the difference is. But as I say, it won't be a 20% reduction in net pay. It'll be less.
Yeah, it can be. I know just from the teacher side of things, when teachers do job share, it can be amazing. Like you get half the pay, technically, but because you're dropped down into the lower tax bracket, you end up with about 60 something % of the pay rather than 50% of it. Yeah. And you're only working half the hours.
So yeah, it could be worthwhile. And like if it frees up, if a couple were to do it, both of them, if you straddle your days, that could save you 2 days of childcare, which could be another further saving as well. And so you need to factor everything in to your calculations here, not just the net pay that goes into the bank account. That's a huge saver if you can take 2 days of childcare out of the mix.
Deadly. And last one then, on teachers again, are filing taxes for teachers slightly different, or are they the same as everyone else?
No, everyone, like the one tax system applies to everyone, regardless of career or occupation, I guess. So teachers shouldn't have anything different. You will be able to claim a couple of things differently than others, like that flat rate expense. You're going to see a couple of different taxes and things showing up on deductions on your payslip. Like I've seen your one, Kieran, the amount of deductions on there is just crazy for various different pensions and whatever agreements that have happened over the course of the years. But in terms of the nuts and bolts or fundamentals of filing a tax return, exactly the same.
Yeah, I think on my payslip every 2 weeks there's like 8 deductions, 9 deductions, 3 different pension ones, levies, the INTO, all this nonsense. Anyway, not just about teachers, but basically you've kind of summarized everything there in a nutshell. But people are able to, with literally a half an hour work, to save themselves hundreds, if not thousands of euro. And is there anything else then that you would say to people that are thinking, right, I want to get the finger out here. I want to get onto revenue and I want to start claiming back what I can. Do you have anything there that people can use or refer to really just guide them as a step-by-step kind of guide or anything like that?
Yeah, sure. Like, firstly, I'd say just genuinely log into Revenue My account and just look at it, get familiar with it, see what's in there, click a few buttons. You can't break anything.
Enjoy the colours.
Enjoy the colours. They're lovely, honestly. Some of the fonts are beautiful. And when you've, managed to distract yourself from that rainbow of colours in the Revenue website, if you are kind of at a loss or you're not 100% comfortable, I do have a PAYE guide available through my Instagram page. So it's at Cloud Accounts Ireland. And if you follow, there's a few freebies on there showing you how to claim the rent tax credit and a few other bits and pieces. And then there's one overall course showing you the whole thing from start to finish. Or if you're not comfortable with that idea, doing it yourself, I do offer a one-to-one service where I'll meet you on Zoom. We'll log into your PAYE tax return and I'll backseat drive it for you and show you, once teach a person how to fish and all that kind of thing. And it's a much better investment than paying a rebate company, in my opinion.
Deadly. We'll leave it there. Alan, you're a legend. Thanks so much for all of that.
Pleasure, as always. And I'll chat to you later, Kieran. Take it easy, man.
Agus Sinné Lahai on episode shut of the Crazy House Prices podcast with the legend that is Alan from Cloud Accounts. If you've ever felt intimidated by the idea of filing your own tax return, I hope this episode has showed you just how simple it can be, whether it's the rent tax credit or flat rate expenses or managing income from your side hustle. Those savings can add up and it's your money. So Alan's advice was absolute gold. So if you want to learn more, check out his Instagram page. It's at Cloud Accounts Ireland. He has guides, step-by-step videos and even one-on-one help if you need it. And as always, if you enjoyed this episode, please share it with a friend, leave a review on your podcast app and tag me on Instagram at Crazy House Prices. I'm always thrilled to hear how this podcast is helping you. And if you're enjoying the podcast and my Instagram and want to show your support, head over to patreon.com/crazyhouseprices. Your support not only helps keep this podcast and the Instagram page going, but also gives you exclusive access to bonus content like detailed Q&As where I answer every single question sent in. Plus you'll get the unique opportunity to engage with my community of over 100,000 followers, asking them questions that Google could never answer. Also, my book, How to Buy a Home in Ireland, is available nationwide. Just Google it and you'll find it in stock somewhere, hopefully, or just rent it from your local library for free. Anyway, I'll chat to you all soon. Slán go fóill.